Standard Investment Bank is one of Kenya's largest indigenous investment banks. And it's very important that you don't confuse Standard Investment Bank for Stanbic or Standard Bank of South Africa or one of the other Standard Bank Group subsidiaries. We are actually an indigenous investment bank, fully owned and fully Kenyan. And under SIB, one of our flagship products that we call Mansa-X manages 42 billion shillings. So we have assets under management of 42 billion shillings under Mansa-X. But as part of the larger investment bank, and I'll explain what this means, we also have other asset classes, for example, equities, fixed income, and so on. And we manage about 22 billion in that respect. Our client base includes governments, fund managers, corporations, financial institutions, HNIs, and retail investors. But the biggest bulk of our investors, especially in the Mansa-X fund, is actually retail investors. We are members of the Nairobi Stock Exchange, Central Depository and Settlement Corporation, Kenya Association of Stockbrokers and Investment Banks. And also, it's important to also note that we are licensed by the Capital Markets Authority. So our milestones, what I have displayed there on, and I hope everyone can see, is really the journey of SIB and the products that we have created over time. We were founded in 1995, so that's just about 30 years ago. And at the time we were founded as Standard Stocks. At the time we were a stockbroker, meaning that we could only engage in the business of buying and selling shares of bonds on behalf of our clients. It's only in 2003 that we were licensed as an investment bank. Again, this is about over 20 years ago. We were then licensed as an investment bank. And since then, we had several milestones. About 5 years later, we were named the best investment bank in Kenya. I believe we have really kept that tag since then. In 2016, we actually handled the largest transaction in Kenya's capital markets, the Kenyan 28 billion rights issue offer at the time. Then about 2 years later, in 2018, at the tail end of it, we were licensed as the first money manager in Kenya, meaning that we were allowed to invest on behalf of clients in the global financial markets. We called that product Mansa-X, and I believe that's why we're all here today. About 4 years later, due to popular demand and the fact that we are very client-centric in terms of the way we manage our innovations, we launched our Mansa-X dollar funds, the dollar version of Mansa-X in 2022. Then last year, we then launched a Sharia version of both funds. Again, a client-centric approach to innovation, because we had a lot of Muslim clients who asked us to create something that did not conflict with their faith. And that's why we started the Mansa-X Sharia under what you call the SIB Najah, which is a Sharia-compliant investment banking arm of SIB. Then earlier this year, again, because of demands from our clients to handle their pension funds, we got licensed by the RBA as a fund manager. So on top of managing funds for investors in a discretionary manner, we are now also licensed as fund managers in the pension sector. Our products and services in SIB, as I mentioned earlier, we do equities, meaning you can buy and sell stocks and derivatives with us. Fixed income, meaning if you're looking to invest in bonds, T-bills, corporate bonds, and so on, anything that carries a fixed return, we are also able to trade or invest on your behalf for that. Corporate finance, we are actually one of the biggest corporate finance departments in Kenya, and we have advised the largest public and private institutions in terms of strategic growth, structuring their balance sheets, raising capital, balance sheet optimizations, and so on. And shortly, I'll show you the kind of companies that we have worked with in this regard. Research, we undertake rigorous due diligence and in order to provide insight and clarity on investment opportunities to investors. And these are, so we churn out many reports, sometimes as frequently as every day, sometimes maybe weekly, monthly, all in different asset classes to keep our investors well informed. And for all investors, potential and existing, that are listening to this, please reach out to us if you want to be added to our research distribution list. The Global Markets Department, which is actually my department, offers exposure to global financial instruments such as the world's major currencies, metals, commodities, global stock indices, and selected single stocks from around the world. And we do this through various funds domiciled within this unit. Of course, the largest and well-known fund is Mansa-X. But on top of that, we also create forex hedging solutions for our corporate clients. And this was especially important when we had a lot of volatility in the Kenyan shilling last year, and we help a lot of corporates to navigate FX risk. Recently, as I mentioned earlier, we now also have an Islamic investment banking division, and it's within that division that we specialize in Sharia compliant investment solutions. But outside the fact that it appeals to Islamic investors, it also works for investors who are looking for an ethical approach to their investment solutions. Highlights in terms of some of the transactions we've done. We've advised and been part of over 60 large project transactions worth over 200 billion shillings. This includes IPOs, rights issues, takeovers and mergers, business valuations, and restructurings. I had mentioned Kenyan, but we also have companies like Qual, Unilever, WPP, Scan Group, Access Kenyan, National Bank very recently, takeover from KCB, Kenol Bill recently, takeover from Rubies. And even helping companies create employee share option schemes, as we did for KCB, Qual, Jamii Bora, and so on. This is just to demonstrate that we do advisory work, and that slide there shows you a few of the companies that we have advised from the Standard Group, Bamburi, CPF, Acorn Group, National Bank, Kenol Bill, DTB. The list goes on and on, but the idea is that we are very big in advisory work, and we continuously continue to improve in that area. So now that brings me to Mansa-X, and we will start with a description of what is Mansa-X. The reason I want to describe this, I want to give this explanation, is because I expect that there are some in today's webinar who are not existing clients. And for that reason, I'll take you through an explanation of what Mansa-X is. Mansa-X is a multi-asset strategy fund with a long-short trading model that invests in financial instruments, both local and global, with the primary objective of creating capital growth for its investors. And we have a dollar version of the fund and a Kenya shilling version of the fund. It's important to note that it's been recently designated the term Mansa-X Special Fund, meaning that it's licensed by the Capital Markets Authority as a special collective investment scheme. And I'll explain later what that means. Fund profile, the minimum investment is 250,000 shillings with a minimum top up of 100,000 shillings. We have a lock-in period of 6 months. This means that if you invest with us, you'd typically be expected to hold the funds with us for at least 6 months. Financial services charge what we call our management fee of 5%. But this is not charged upfront. We prorate this over 365 days. We have a performance fee of 10% above the hurdle rate. What does this mean? If, first of all, the hurdle rate for the Kenya shilling fund is 25% and the dollar fund is 15%. What performance fee of 10% above hurdle rate means is, if, say, the fund returned 30%, that would be 5% above the hurdle rate. So over and above the 5% fee that we charge you for management, we charge you 10% of that 5% in excess of the return of 25%. Our custodians, ACIM Bank is our main custodian, and this is for both our Mansa-X Kenya shilling fund and our Mansa-X dollar fund. Withdrawals are processed fairly quickly within 2 to 3 working days. In fact, we actually like to say that they're immediate, and it's really dependent on the banks that you're using. It's really a banking reason why it's between 2 to 3 working days. Our AUM, as at the end of September, was about 32 billion for the Kenya Shilling Fund and about $47 million for the Dollar Fund. So how does this compare with the rest of the industry? We are in the top 5 licensed unit trust funds in Kenya, and that's for both the Kenya Shilling Fund and the Dollar Fund. If you look at our Kenya Shilling Fund, we come number 3 in terms of assets under management. The first is CIC, the second one is Sanlam, and Mansa-X is the 3rd largest unit trust in Kenya. We're very proud of this ranking, considering that a lot of these companies are decades old, and we've only been in existence for 6 years as a collective investment scheme. And that's the same for the Dollar Fund. Again, we are the 3rd largest collective investment scheme in Kenya, handling about almost 17% of the total dollar funds invested in this country in the collective investment scheme space. Why did we choose to go into global markets? Why is Mansa-X biased towards investing in global markets? It's really because it's a sizable market and allows us a lot more opportunities. These opportunities tend to then influence a better return for our investors and also genuine diversification. And when I use the word genuine diversification, I use that because it prevents you from being overtly exposed to any one asset class. And I think that's the biggest advantage that Mansa-X offers. If you look at the world and the assets that are available out there, because sometimes people ask us, oh, why is Mansa giving a higher return than other funds and so on? We live in a world where there are a lot of opportunities, and it would be a disservice to our investors if we did not tap into this. Let's look at our derivatives market in the world. It's about $1 quadrillion in terms of size. We're talking about what's traded in options, swaps, forwards, futures, all manner of derivatives. Equity capital markets, we're always looking at the Nairobi Stock Exchange here. And whereas we still invest in this, there's still a much bigger market globally with about $112 trillion listed out there in terms of individual stocks, stock indices, for example, the London Stock Exchange, New York Stock Exchange, NASDAQ, and so on. Look at how big that size is. Debt capital markets, about $315 trillion. I mean, these numbers are mind-boggling, but that's actually what is out there, and that's what we look to tap into. And this is really just as at the end of Q1 2024. Now it's even higher. And we're talking about markets in commercial papers, corporate bonds, and all manner of fixed income securities. Of course, then you have a very big one called the Forex market, which trades every day. Every day, the daily turnover in Forex is $7 trillion. It's really the biggest market in the world. And here again, we're talking about spot markets, futures markets, forwards, options, swaps, and so on. Then commodity markets is about $131 trillion worth. And that's a notional value of what is actually traded. And in commodity markets, we are really talking about agricultural commodities, precious metals, energies, energy markets, say natural gas or oil, livestock, industrial metals, and so on. Even cocoa, sugar, and so on. The reason this slide is very important is because this really answers anyone who's constantly asking why Mansa-X gives a higher return. This slide says it all. Even before I go into our strategies and so on, this slide tells you that we are tapping into a much larger market than what is locally available. And therefore, the comparison between Mansa-X and other players should really be between Mansa-X and players globally who invest in the same asset classes. We tap into asset classes that are a lot more diversified and a lot more deeper, allowing us therefore to squeeze out a better return on behalf of our investors. What are our asset classes specifically? We have, we trade in global markets and local markets. I'll start with the local market. We actually invest in the local NSE market. Of course, we're in cash because we receive cash from our clients. So we invest in cash and cash equivalents. We also in ETFs, for example, the gold ETF. In fact, in Kenya, the gold ETF, the first as fund manager to actually buy the gold ETF on the Nairobi Stock Exchange was actually Mansa-X. That's again something that's a first for us and for in the industry. And also we were also the first ones in Kenya to invest in the derivatives market in Kenya, which is called Next. There's actually a derivatives market in Kenya, and the first trade on that market was actually done by Mansa-X. Globally, we invest in fixed income. So we're talking about US treasuries, German bonds, the UK gilts, and so on. We're in stock indices. So we're talking about NASDAQ, S&P 500, all manner of stock indices around the world, Hang Index, Nikkei Index, and so on. Commodities, natural gas, oil, cocoa, sugar, single stocks. This is especially important for us, single stocks. Again, if you look at our typical holdings at any one time in Mansa-X, we hold over 200 individual single stocks from around the world. Precious metals, we are big, we participate significantly in trading of gold, silver, platinum, palladium, essentially precious metals. Currencies, again, this is also something that we trade in using all manner of instruments, whether it's trading in the spot market, forward market, swap market, options market, and so on. Again, currencies from all around the world, starting with the dollar, euro, pound, all the way to the yen, Swiss franc, Canadian dollar, name them all. Derivatives are important for us. In fact, the other day I had a forum and I was explaining to people that derivatives get a bad rap because, in fact, someone once called them weapons of mass destructions and so on. But derivatives are very important when you're trying to create capital efficiency, which is very big for us in the fund, creating exposure to the fund without overtly using all the cash that's available to us for investors. Use of derivatives is what allows Mansa-X to squeeze out a return while still remaining very liquid. Again, this is very important for investors to understand. Mansa-X gives you a very good return, but is one of the most liquid investments you can make. And one of the reasons we're able to do that is a very skillful use of derivatives. Fund benefits, diversification, like I mentioned, being exposed to asset classes from around the world. Being in a 24-hour market, that's a big deal for us because, at any one time, the asset classes we expose our investors to are traded around the world. This is important because it means if you wanted to exit a fund or if anything happened globally, we live in a world where one small thing can trigger a systemic reaction globally. Being in a 24-hour market can help us to exit or react quickly enough. Dollar return, again, because we typically invest in foreign currency assets, there is an advantage that comes from that because over time, just due to the yield differences, what you call interest rate parity, the Kenya shilling tends to depreciate over time against the dollar and other hard currencies. Leverage, the ability to trade amounts larger than we have been given by our investors allows us to really squeeze out disproportionate returns to the risk. So our risk is limited, but we then take advantage of leverage to boost our returns. Trading opportunities, this is very important. A lot of questions from our investors are always about what will happen if stock markets lose value? What happens if interest rates flip and suddenly bonds are no longer returning what they used to return? How do you make the same return? How are you able to squeeze out a return in spite of market movements? It's because of the ability to trade up or down. This means that we can go long if the price of underlying assets is rising. That's called going long an asset class, or we can go short when the value of an asset class is going down and actually make money from that, not just protect ourselves from loss, but actually make money from that. It's a strategy by itself. So that means that Mansa-X is able to make returns no matter the market circumstances. And it would really just be a matter of tweaking whether you are long or whether you're short the asset classes that you're trading. That's very important for investors to understand. And not only to understand that this should give you comfort when you're sleeping at night, not to worry that Mansa-X can only ever make money when markets are doing well. Because again, that's a question we receive from a lot of our clients. Please note, Mansa-X is designed to actually weather all types of markets. Liquidity, I'd mentioned that before. It's important for Kenyans and Kenyan investors, especially, to understand the importance of liquidity. It's one thing to make a return for your investors. It's another for your investors to be able to access funds as and when they need these funds. And this is important because for far too long, fund managers and wealth advisors maybe focus too much on return, and as a result, investors also got only used to ever talking about returns. We are happy to give a high return in Mansa-X, but we're even more happy that we are able to allow you to access this return when you want to access it. Then, of course, having a local presence. One thing I tell people every time is what we do here can be found by hundreds and thousands of hedge funds all around the world, from New York to London to Tokyo, Singapore, and so on. A lot of hedge funds do what we do. A lot of fund managers globally tend to do what we do. The reason why we feel that you should invest with us is because there's a local presence. Okay, if you invest with State Street or Oppenheimer or all other global fund managers, you really cannot call them on phone or walk into their offices. You don't even know where their offices are. Mansa-X, our offices are here in Nairobi. You know where to find us, and we still give you the same advantage that you'd receive if you invested in those funds. So it's global exposure with a local presence. That's a very big benefit. Risk management, of course, that's one thing that everybody should be concerned about. We have a very well-defined investment process. We have limits that we use, both asset class, geographical, dealer limits, intraday and overnight limits, and then we have very good oversight. I personally answer as a portfolio manager for the Mansa-X funds. I answer to the investment committee, and it's an investment committee that meets every week. And we really essentially have to go through a risk conversation with them every week about the funds that we are holding on behalf of you, our clients and investors. We also have trustee oversight. And it's important to note Mansa-X started having trustees even before we were required to have that, because you only need to have a trustee if you're a collective investment scheme. Mansa-X started having a trustee way before we were even required from a regulatory perspective to do that, because we take oversight, the oversight of our activities very, very seriously. Then, of course, the fact that we are regulated by the CMA, we have regular regulator inspections and audits. This means that at any one time, your regulator is constantly going through our books to make sure that the assets that we claim to have are actually there, they exist, the cash that we claim to have actually exists, and to also confirm that the way we calculate our returns and disseminate this to our investors is actually also correct. This is all done on a regular basis by our regulator. Q3 2024, that's a number. Mansa-X Special Fund, that's a Kenya shilling one, delivered a 21% return net of fees. So if you look at our actual 9-month return was 15.75, but the return up to that 9 months was 21%. I believe this is the highest return in the market for a special fund, at least a published one. Now, what you're looking at there is quarterly performances of Mansa-X. We always present these on our fact sheets. And if you're an investor and have never received our fact sheets, please reach out to your financial advisor and request for one. If you're a potential investor, again, and you're looking for a fact sheet for Mansa-X, you can reach out to client services, sib.co.ke, and they'll furnish you with our fact sheets, which will give you, for example, something like this that will show you the performance of the fund for the last 24 months on a quarterly basis. So Q3, we returned 5.14 for that quarter. Q2 of this year, 4.99%. Q1 this year was our best quarter for a very long time, having returned 5.62%. Last year, we did typically around 4.5%, and 2022 Q4 is there, 2.61%. This is also important to demonstrate that Mansa-X is a market-determined fund. Okay, we are not a straight line return fund. It's not like the way you place money in a bank and they give you 10% for a year. So then you know your return is 10% divided by 365 and you draw a straight line. Mansa-X would typically have varying returns quarter on quarter, but our portfolio allocation strategy is to try and at least give a certain return that's market beating by the end of the year. If you had invested in Mansa-X in 2019, and this number should really be very important to all of you. If you invested 1 million shillings in 2019 when we started this fund, your 1 million shillings will now be worth 2.7 million shillings after fees. So you can imagine what this is really demonstrates the power of both compounding and also being above average in terms of the returns that you're actually earning on your funds. What about the dollar fund? In Q3, the dollar fund after fees delivered a 12.71% return. And the actual 9-month return was actually 9.53%. Again, I believe this is the best in the market right now. Similar chart there, but now for the dollar fund, on quarter for the last 24 months, having an average return on a quarterly basis of about 3%. So we're talking about reasonably, based on past performance, Mansa-X has been able to deliver about 3% every quarter to our investors. That's an important figure for you to keep in your mind, because if you're planning your cash flows, then you'd look for a fund manager like us who would then be able to give you this kind of return per quarter, and it helps you plan your investments and quite hopefully how your savings are managed. Again, if you had invested $10,000 in 2022, because our dollar fund, we said it about 2 years ago, then your $10,000 will now be worth $12,636.62. Again, we believe that's a really phenomenal growth, and I'm sure you all agree with me. And you can imagine that's in only 24 months of existence. What are our top 10 holdings? A lot of clients, both existing and potential, are constantly asking us, where does the money go? What are the big assets that invest? So one of the things we started doing about 3 years ago was now allow our investors to have an actual number of our top 10 holdings and their proportion in the fund. Of course, the larger part of the fund is dark because there's so many assets and the percentages are insignificant. But for example, in Q3, our biggest holding was fixed income instruments. With the Federal Reserve and most central bank players adjusting monetary policy, fixed income instruments become very important and a very lucrative place to invest in. So 5.89% of the fund was in fixed income instruments. 5.75% was in NASDAQ, the NASDAQ 100. This is really an index that consists of most technology stocks. We were in the Japanese yen, and there's a reason for that, especially around the fact that the Japanese yen continuously traded at zero or sub-zero yields, which allowed us to have a lot of opportunities in using it to trade other asset classes, what you call the Japanese carry trade. And we were holding about 5% of the fund in the Japanese yen. Interest rate derivatives, again, a very big factor around making and taking advantage of central bank actions. We were heavy in sugar. We actually trade sugar as an asset through futures. NVIDIA Corporation, in this era of AI, one of the things that has been very lucrative for Mansa-X is actually investing in chip-making companies like NVIDIA, Broadcom, ASML, because we are then able to take advantage of the AI revolution by investing. They say that if people are mining for gold, you should sell them shovels. So we invest in the companies that sell the shovels. So in this world right now, NVIDIA and chip-making companies are the companies that are selling the shovels, and we have invested about, if you calculate plus the other chip-making companies that we own, about 5% of the fund was in chip-making companies. JP Morgan and Chase, 1% of the fund. This might tend to increase, and I'll talk about the outlook moving forward as finance companies become more dominant in reducing interest rate environments as we expect from this quarter and next year. Alphabet, 1.21% of the fund. There we had some cash, significant cash of about 1.5%. Novo Nordisk, again, we were big on pharmaceutical companies due to advancements in things like Ozempic, weight loss drug, advancements in a HIV prevention vaccine that's developed by Gilead. So technology companies and pharmaceutical companies have been part of a big play for Mansa-X this year, and specifically in Q2 and Q3 of 2024. Dollar fund holdings are typically the same. The only thing I'll explain is, if you look at this other side of the pie chart that says other assets, 66%, then you would ask, what is in that section of the pie chart? This demonstrates to you just how many assets are held in Mansa-X. Again, I'll keep repeating this so that if you ask me, why does Mansa-X have such a high return? Why does Mansa-X give a return higher than everyone else? What are you guys doing that is so magical? There's nothing really magical. We are just invested in a lot more assets, all right? At any one time, if I was to ask if I was to check our portfolio right now, we are probably holding about 250 individual company stocks in our portfolio right now. And that's why the part that says other assets, that actually refers to that, and other derivatives and so on that we are trading. How did these top assets perform in Q3? So this one will be very quick, and I'll just do this to demonstrate to our investors why, therefore, Mansa-X tends to give the return it does. Gold, year to date, you can imagine it's grown by 27%. That's a 27% growth in just one asset class. Q3 alone, it gained 13%. S&P 500, year to date growth, almost 21%. Q3 alone, a growth of 5.5%. NASDAQ, year to date, a growth of almost 20%. Q2, about 2% growth. Meta, this year alone, phenomenal growth of 61%. Q3, about 13.5% growth. Eli Lilly, this is a pharmaceutical company. Again, we tend to be very, we had tended to be very big on pharmaceuticals this year. This might change, and I'll explain why. But this year alone, it's grown by about 52%. But in Q3, it lost about 2%. Apple, a year-to-date growth of 21%. Q3 alone, the stock moved 10%. A lot of you are watching this webinar on your Apple phones. If you're not a client of Mansa-X, please note that you would have been taking advantage of buying that Apple phone. You'd have been part of the benefit from a fund like ours that actually invests in Apple. And for potential investors, that's a question you should be asking yourself. Broadcom, a chip making company, like I mentioned, this has been part of our strategy, especially for the last 2 years. This year alone, it's jumped over 50%. That's quite significant in any stock. Q3 alone, 7.5%. Walmart, again, over 50% growth this year alone. And Q3, almost touching 20% growth. The Southern Company, and this is a strategy that I'll explain later. We are really looking to go into utility companies, especially as interest rates come off. So one of the companies that we invest in is the Southern Company, is one of the second largest utility companies in the US. This year, it's grown almost by 28%. And Q3 alone, it grew over 16%. Welltower, real estate. As interest rates start coming off, one of the things you'll notice within the portfolio of Mansa-X is actually really getting into listed real estate companies like Welltower, a major developer in the US. This year alone, it's grown by 42%. In Q3, grown by over 22%. Bamburi, there's always a lot of questions of why don't you talk about local stocks? We invest in local stocks, and this year, Bamburi has gained almost 64%. Q3 alone, Bamburi gained over 40%. And it's important to note that Bamburi was actually one of our top 10 holdings. And then you'll also notice that we were actually listed as a top 10 shareholder of Bamburi. That's how we take opportunities, both local and global. We don't discriminate. General Dynamics, a defense contractor. Year-to-date growth of about 16%. Q3 growth of about 4%. You keep talking about geopolitical tensions, concerns about what's happening in the Middle East, Israel, Palestine, and so on. As opposed to just talking about it, invest in companies like defense contractors. And we do that here. And one of the companies that we invest in is General Dynamics. How do you take advantage of bonds? Year-to-date yields for the US 10 years have fallen. The reason that's in green is because there's an inverse relationship between yield and price. If the yield of 10-year bonds falls by 2.5%, then essentially you're talking about that being a price gain for that bond. And in Q3, the move was phenomenal. The yield falling by about 14%. That, of course, led to very serious, significant moves in the price of US Treasuries. How does Mansa-X return compare to other investments? We've consistently outperformed the performance of bonds, money market funds, money market funds, fixed deposits, even SACCOs, which are very popular locally. We have still outperformed all these asset classes. So FAQs. I'll just answer maybe, I think, two questions that keep coming up. So I'll just answer them very quickly before I take it back to Terian. People ask us, should I invest in the dollar or the Kenya shilling fund? Now, it's very important to note that this is dependent on what your cash flows are. If you earn in shillings, please invest in shillings, okay? Because saying if the Kenya shilling fund returns 21% and the dollar fund returns 12.7%, it does not imply that the dollar fund performs less than the Kenya shilling fund, all right? It's an economic theory thing, which means that a lower yielding currency would typically also have a lower return than a higher yielding currency, in this case, the Kenya shilling. So if you keep changing between the dollar fund into the shilling fund and vice versa based on street rumors about whether the shilling is going to weaken or not, you continuously erode your own return. And we've seen some of our clients do that, and would really advise you, if you earn in dollars, your salary is in dollars, or your rental income or your business is in dollars, invest in the dollar fund. It makes absolute sense. If you earn in shillings, your obligations are in shillings and so on, invest in the Kenya shilling fund. So please avoid currency exchange risk if you do not need to be exposed to it. And please note, we also do not determine the currency exchange rate. If you call us to convert, say, dollars so that you can invest in the dollar fund, we'll give you market rates. We are not in the business of earning from our clients in terms of how we exchange the currency that you exchange with us. And then we've also been asked about the requirements to open a Mansa-X account. Of course, for a personal account, we just need you to have a valid ID or passport, a utility bill, or a copy of your original KRA PIN certificate, passport size photograph, copy of your bank statement, a single page of that, and then a completely filled account opening form. Corporate account, very similar, just certificate of incorporation, ID and passport of directors, their utility bill, copy of bank statements, board resolution confirming signatories, share certificates, the CR12s and W8 bands for the American companies, and a completed corporate account opening form. So thank you very much for listening to me. Our offices are Jekwa Towers, 16th floor in Nairobi, Kenya, on Kenyatta Avenue. And again, for anyone looking to ask questions or even get more information, our email address is clientservices@sib.co.ke. Thank you very much.
My name is Victor Marangu. I'm the head of distribution at Standard Investment Bank. Thank you, everyone, for taking your time to have this engagement.
Victor, what is head of distribution?
I lead the financial advisory team. That is the team that engages investors and potential investors. They have conversations around the investment objectives. They're able to look at what is investable that they can put in Mansa-X as a way of diversifying their locally held portfolio to global markets to generate returns that actually beat inflation and ensure growth of their overall wealth portfolio.
And of course, we have been taken through, what Mansa-X is. But just to take us a little bit deeper and perhaps to uncover or unpack a little bit more for our audience. One of the things that was mentioned just when we kicked off is that now it's being called the Mansa-X Special Fund. So what does that exactly mean, and what does it differ? How does it differ from Mansa-X as we knew it before?
The term special actually is meant to reflect our unique approach to investments, focusing on a more diversified multi-asset global strategy. Okay, so as we seek to generate higher but risk-adjusted returns for investors. This differentiates us from the conventional investment products that typical Kenyan is used to, and that's actually highlights our active management style. So it's special in the sense that it's a multi-asset strategy fund that invests in both local and global. But most of the conventional funds are actually investing in local equities and local debt issuances.
Victor, tell us a little bit about the internal controls that that you have to prevent unauthorized trading. You know, in the world we live in today, I think we get to hear hacking here and there. So what internal controls do you have to prevent this and to protect your investors?
We ride on a comprehensive framework of internal controls. This includes automated risk management systems. Of course, regular compliance checks, things like dual authorization for trade execution. Like you cannot just wake up and decide, I want to buy Tesla because I saw it going up or something like that. So there's that authorization of trade execution. Of course, those regular edits to ensure that all trading activities are secured and authorized.
All right. So I just want us to continue focusing on some of the fund features for a moment. Is there a possibility of lowering the entry and top-up amounts? And I've seen that that's also one of the questions that has been asked on the Q&A segment in terms of, the entry point and the topping up amounts.
The minimum investment for Mansa-X is actually 250,000, and we keep getting feedback about can we lower the minimum to maybe 100 or 50. And yes, we can accept as low as 100,000. But typically what we've seen is that even if people start at 100,000, eventually we are talking about an average account size of about 2 to 3 million, which tells you that there's that need maybe to start and begin. And we believe in financial inclusivity, and we can take as low as 100,000 and minimum top up of the same amount. Yeah.
Okay, I guess that's important to know. So thank you so much. What would you say are some of the other benefits of investing in Mansa-X? And I want you to speak towards two people. One who has not begun investing in Mansa-X, and two, one who has and is curious about, why should I keep investing?
Yeah, when you invest in Mansa-X, you set up yourself for on a journey to growing your portfolio because of its nature of diversification. The other thing is that you are able to focus on what you do best. You go ahead with your daily activities, knowing that this is a discretionary managed portfolio where your advice is not required every other time. Or for the fund manager calling you, do we buy oil? Do we sell gold? Do we do this? This now you leave it to a professional fund manager who has experience in markets and fund management. The other thing you enjoy is economies of scale. By that, I mean, to enter certain markets, you might require high capital requirements, but with as little as 100,000 to 50,000, you're able to join that's what you call it, a collective investment scheme, so that you can be able to take advantage of larger global markets. And that is not possible if you just went to New York Stock Exchange or London Stock Exchange with 250,000. The other bit is, of course, if you look at our historical performance, we've been able to generate average net return of 17.72%. That one, if you adjust for inflation, even if when inflation was high as high as 9.2%, you still realize that you actually have a double-digit growth on your investment portfolio. The other bit is, of course, we are here localized. When you talk about investing offshore or in the global markets, you don't have to worry about some people, some addresses you're not aware of. You can actually walk into into SIB and meet financial advisors and have conversations with them. You'll be lucky to meet someone from your village, and I'm sure that would give you even more confidence when you see you're actually dealing with real people and not someone on the other end of the email and other medias of engagement.
Segment when it comes to matters of withdrawal, and I've seen some of the questions from the chat section as well. Some of our audience is asking, can I withdraw the money in case of an emergency? What is the procedure? Must I come to your offices?
That's a good question. And again, like I mentioned earlier, it's one of the things that we are very proud about in Mansa-X. We are a very liquid fund. You can withdraw your funds. We have a lock-in period of 6 months, okay? Lock-in period typically means that we try to discourage investors from treating a Mansa-X investment like a current account, okay? That's why we have a lock-in period, because it also distorts portfolio management ability, and also for the investor, they also lose out on the ability, on the advantage of being in a fund long enough for it to be valuable to them. However, after the 6-month period, you can then withdraw at any time. But what happens if you want to withdraw before the 6-month question? Well, I mean, I think that's your question. And you have an emergency. Because we are very client-centric, we take this on a case-by-case basis, but we have never turned away a client who needed to access their funds even before the 6-month period. We have never done that. So that to answer your question.
All right, so we've got another question still around the same. Suppose I recall half of my investment before maturity. Will I still earn?
Is it an emergency? If it's not an emergency, you would lose out on the return. You'd lose out on the return. Again, like we mentioned, this is really to encourage investors to treat this as an investment, not as a current account. But if you're looking to withdraw half your investment because of an emergency, like we said, we are client-centric. It's a conversation that you can have with your financial advisor, who would then guide on the best way forward.
Let's go to risk. And I remember as a young journalist in the business space way back, when they used to tell us, if you see a high return, just know there is a high risk, or high risk, high return. Perhaps you can tell us, what's the risk appetite for the fund? How safe is our investment? And I'm saying us as an investor of Mansa-X personally. And can one get less money than what they invested?
It's a good question. And yes, typically high risk is high return. But also, and that has also been used as an excuse for investment professionals who underperform markets. Funds like ours are always looking to create what you call alpha, okay? So alpha measures the increase in return as a factor of how much more risk the fund has participated in, okay? So just because a fund manager takes your money and buys a 3-month T-bill doesn't mean, therefore, that another fund that takes a higher risk and maybe invests in something ever so slightly riskier and invests for a longer period and gets a higher return is more risky. That's why they created something called an alpha return. Alpha is the return over and above the typical risk-free rate or typical market comparative rate in the market. That said, Mansa-X does not get a higher return, and this is important. It doesn't get a higher return because it typically creates disproportionate risk. Mansa-X gives a higher return, or has tended to give a higher return, simply because it is invested in a lot more assets. Terian, if you only had 5 stocks available to you to make a return on, no matter how good an investment professional you are, you would typically not make a very high return. And in fact, even the return you gave, even if it imply safety, would actually be riskier, because in case of anything, you're only dealing with a very small universe of investable assets. Now, as I mentioned earlier, that's why I remember I showed you a slide and I said this slide is very important. The reason I showed that slide was to show Mansa-X is in over, at any one time, looking at stocks alone, even before I talk about commodities, metals, and so on. Stocks alone, at any one time, we are holding about 250 individual single stocks. So Mansa-X is able to squeeze out a higher return purely because of this. And in fact, because of our model of using long-short model, hedging techniques, what we call hedging techniques, it actually, in a sense, in a market where it's been a bull run like this year, we've actually kind of underperformed some hedge funds because of hedging, even when markets are going out, simply because we are watching the downside. So our fund is so well protected on the downside that a lot of times investors and potential critics like to think that Mansa-X portfolio managers are consistently only focused on returns, as if we are obsessed with this return number. No, our actual obsession is actually on protecting the downside risk. And typically, the upside tends to take care of itself. If we are constantly making sure that this downside risk is limited to this level, the upside tends to take care of itself. And that's what has naturally happened and been proven to happen for the last 6 years. I don't think in any way Mansa-X is much riskier than most of the local funds. And that is I want to be very firm about this and say this is something that a lot of our critics unfairly depict us to be. We are simply, in fact, Terian, if you had a big crisis in local stock markets and local asset classes, Mansa-X would probably be the only fund that would still give you a positive return. Just to put that in perspective. That is how detached we are from any one market dynamics, including the American markets, because I know that's another question that will probably come up. Yeah.
Okay, yes, thank you so much. And you have answered, in a sense, my next question, but I just want to ask it differently. And this is, when it comes to losses, and you did mention in your presentation that you are thinking of reducing exposure to certain assets or to certain investments that you did talk about. And the question is basically around how you're protecting your investors or those who invest in Mansa-X against some of the losses, let's say that we have seen in the presentation, minus 2% in Q3 for a particular asset that you're investing in. Could you just tell us a little bit more about that?
Okay, that's a good question, and it speaks to portfolio management techniques. So one of the things that you will notice is we distribute a fact sheet to our investors and would be potential investors. And one of the things is that you'll notice our top 10 holdings, they're not static. But there are some assets that there's some companies that maybe we've held for more than a year or so. In fact, for some time we held gold for a very long period, and then it dropped off. Typically, we will modify our investments based on change in global monetary policy, for example. And that's why, for example, I mentioned with central banks, like, for example, this year, with central banks looking to manage inflation, it was our expectation, and I mentioned this in a lot of my YouTube videos, that interest rates will continue to trend downwards. As a result, Mansa-X increased its fixed income holdings, and that's why it's actually our top 10 holding because of that expectation. So we trade based on what we expect to happen in the future. We have been very big on pharmaceutical companies. And one of the things I mentioned is that we might end up trimming, and I think that's what you are referring to when I mentioned that some of these strategies might change around pharmaceutical companies. This is mostly because we expect in the Trump presidency, healthcare companies might not have the kind of clout that they had in the previous presidency. So therefore, we might reduce, there might be a bit more regulation around vaccines and creation of new products in the pharmaceutical industry. Based on that, we might cut down on some of these pharmaceutical companies. Again, you might see an increase in financial services companies, because as interest rates go down, then you expect banks to make a lot more money. So these sort of dynamics are constantly being adjusted within the portfolio, both to manage risk and optimize returns. But when you mention companies that have lost value, how do we protect from this? Sometimes we are short those companies. All right. Sometimes we could be wrong. Like in Eli Lilly, for example, we owned it in Q3, but it lost us money because it actually lost value, yet we were long in it. But there are instances where a company can actually lose value and we are short in it and we make money from that. An example is like when oil lost value during COVID, we were very short. We really like to talk about that trade because it was a big one for us. We were short oil, and therefore, when oil prices plummeted to even negative prices, we really took advantage of that move. So we can actually make money when companies or asset classes lose value.
Okay. Thank you. And I think you've responded to my next question, so I'll skip it. And it was basically around, still within the global markets, some of the geopolitical tensions. I wanted to touch on Trump's re-election and what that, could mean in terms of optimizing your investments. But I think you have responded to that. So I'd like us to go to a little bit about asset allocation. So we've seen, as you mentioned, there's a dollar fund, but it seems to have a lower return than the shilling fund. Are they not invested in the same instruments?
Oh, that's a good question. But like I mentioned earlier, you have a difference in the yield of currencies. So if I only hold all my funds in dollars and I invest in dollar assets, okay, there are some instances, there are certain hedging tools, certain derivatives that have accrued value in the Kenya shilling fund that do not accrue to the dollar fund. If, for example, if I take the Kenya shilling fund and compare it with a Ugandan shilling fund or a fund or a currency that yields, right now the shilling essentially has a yield. If you look at the risk-free rate, which is a central bank rate, is about 12.5%. Whereas for the dollar is actually around 4.5%. That is called the interest rate differential. And in economics, no matter what you invest in, typically you will end up with this differential, no matter what asset classes you invest in. If we dive deeper into that, it turns into an economics class. But typically, if the yield is high for a currency, and that's why monetary policy is very important. That's why the entire ethos of investing is based on what central banks are doing. Is because if the yield of a currency is lower, its investments will also tend to be lower that way. But that doesn't necessarily mean it's a bad return, because it also means that that currency typically is more stable maybe and will typically outperform these currencies over time. Let me give you an example. Economically speaking, you expect that in 1 year, a currency would then lose by that interest rate differential. So in January, if I start at 0 and at the end of the year, the shilling returns 21%, the differential for the Kenya shilling against the dollar is about 10% or 9%. You'd then expect that at the end of the year, the dollar should be 21 minus 9, which is about 12. That is actually exactly what you expect. If the dollar fund returned 21%, that would be phenomenal outperformance. Yeah.
All right. So we do have a question around Bitcoin. And so I want to ask, do you still hold the idea that Bitcoin is not a viable investment? And I guess, why not invest a small portion into cryptocurrencies like other global investment companies?
Well, I have never actually said it's not viable. The only thing I say is that in terms of holding it as an asset, we've always had an issue with the volatility of it as something to hold in our portfolio. We felt it will create too much volatility in the fund that was unnecessary. I still hold, and I still hold the belief that I don't think there's any intrinsic value in Bitcoin. I still feel that. Many people disagree with me, but I still feel that way. And in terms of also holding it in our portfolio, there's also a regulatory aspect to it. For a long time, in fact, the CBK and CMA did not really allow trading in Bitcoin, at least not in publicly traded funds like ours. No, it was not allowed. So if as an individual you want to invest in Bitcoin, that is a good time. You're about to go into serious deregulation environment with Trump coming in. In fact, Bitcoin could easily hit $150,000, but probably not a bad idea if you can tolerate the volatility that comes with it. As something that we want to add into our portfolio, as probably something we'll continue to talk about and see how that is viewed by our trustees and our regulators. But for now, not just yet. Not just yet.
All right. So allow me to just touch on the geopolitics slightly. I think it's important to just, have a look, for example, at what a Trump presidency means for Africa's economic growth. And I know there's, views and opinions across the board. What is your opinion on what this means for, one, Africa's economic growth, investment portfolios globally as well, and the Mansa-X Fund specifically?
First of all, we think that mostly we have to look at it first from what happens in the US, because as the president of the United States, what he does and it affects the US economically, then transmits to the rest of the world. Because if the US sneezes, the rest of the world catches a cold, as the old adage says. So right now, of course, his biggest push is on tariffs. Okay, that's what we are really looking at. That was a campaign rhetoric. Of course, whether he will actually implement them, as he said on the campaign trail, is something we are waiting to see. And the other thing is issues around regulation. He'll be pushing for a lot of deregulation of industry. And the other thing is actually also cutting tax rates. In fact, he's looking to go below 20% on corporate taxes. Some of these things have the effect of creating an inflationary environment. For example, if you increase tariffs domestically, then typically the prices of goods within the US borders will tend to go up. This can increase inflation, and we have just dealt with inflation recently. The US inflation has dropped to as low as 2.6%. This is a number that was as high as 9% just 2 years ago. And this has really been the reason why the Fed has continued to cut rates the whole of this year, and we actually expect them to cut rates next year. So our question becomes, if inflation pivots, do we then find ourselves in a situation where interest rates are raised again? How does that affect cost of credit globally? Of course, in Africa, one of the things that affects us is if there's a risk on attitude in the world where investors feel bullish, they typically tend to invest in what you call riskier assets, and Africa falls under the category of risky assets. Most of our debt, most of our equities, and so on. So with lower inflation, lower interest rates, we had started seeing a lot of FDI, even into Kenya. In fact, this year alone, our stock market and our bonds, Euro bonds, have performed well because of FDI for that reason alone. But now that's a question we'll have to ask ourselves if they create inflation. But Republican governments, especially what we saw during Trump's presidency last time, is also a focus on more public-private sharing and arrangements, almost like a business-like arrangement between the US governments and the governments that it works with. A good example is, if you look at the US government right now, it's trying to do the Usahihi project, so Nairobi-Mombasa highway. So with the previous regime was all about giving aid to Africa. What we expect with the Trump presidency is, let's do business together. Let's build this road together. You put X amount, we'll put X amount. Let's put tolls on this road, and we all make money from this. We expect that there'll be a lot more infrastructural investments under the Trump presidency, but in a business-like way, not through aid. For sure, we actually expect aid will actually be cut.
All right.
But it can actually end up, sorry, Chirian, it can actually end up being very good for our markets. Because again, funds like ours and also pension funds locally, and I think I also speak for a lot of fund managers who are looking to enter into infrastructural projects. These are a very good time to consider, diversifying portfolios, especially for patient capital. I'm talking about pension fund managers and ourselves, to really just start looking into investing in infrastructural projects, because you expect that the Trump presidency will be pushing for you to put up some skin in the game if there's any sort of funding to be given to any project. And we can actually make money from investing in those.
Oh, wow, this is some really great insights. So thank you so much for sharing that. Still staying with the US, we've seen a spike in US stocks, as you had mentioned, and some ETFs. Does this translate, if we look now towards Q4, and keeping in mind what you have just mentioned about Trump's agenda when it comes to working with the world, how do you see this affecting the returns for Q4, specifically for Mansa-X?
Well, for Q4, we expect a Santa rally. Okay, typically every time before Christmas, stocks rally anyway, in spite of what has been happening even from a geopolitical election standpoint. So we'll be taking advantage of that. We expect a reduction of interest rates. We expect maybe another 25 basis points cut in December. We will therefore expect to make money from our bond holdings, both Euro bonds, locally as well. We expect rates to fall off. We'll be taking advantage of bonds trading in that space as well. So fixed income, we expect a better than average return there. Stocks, we still expect a Santa rally and we'll take advantage of that. So we still expect a good close for Q4 going into the year. A lot of concerns around what Trump will do will most likely trickle towards next year, and in fact, end of Q1 next year. It's too soon. Markets right now are sort of dismissing it. It's too soon to even talk about it. Right now, we're just going on as if nothing has happened. In fact, it's optimistic because, of course, markets are pretty certain there'll be a lot more deregulation. So they feel that maybe this will be good for business earnings. They expect that there'll be a lot kinder approach in terms of corporate taxes. Again, markets then factor in better earnings because of that. We are looking forward to NVIDIA earnings actually just next week. And one of the things that we are looking forward to are better earnings. And moving forward, deregulation, tariffs, and taxes probably lead to better earnings. And we therefore think the stock market will continue to be very well supported.
All right, you've talked about bonds, and I just want us to quickly touch on that. In regards to IMF funding, how do you see that impacting the Kenyan bonds, both the local and the infrastructure bonds?
First of all, funding from the IMF, of course, continues to help us in terms of restructuring our debt. It also helps us with discipline in terms of even how we accept debt. Let's even just go back to March this year when we paid off the Kenya 24 euro bond. That was a turning point for this country because without that, sentiment was so against everything. I mean, the sentiment was against the currency, the sentiment was against our ability to pay debt. So when we paid off the euro bond, suddenly the shilling went back from 160 back down to the 130 levels. And this has continued to sustain positive sentiment in this country. So continued participation by the IMF in terms of our funding is expected to continue helping us in terms of we do not, as a central bank, the central bank doesn't go into the market with a lot of almost desperation, so to speak, which helps in their monetary policy dissemination. That if they drop interest rates to 12% or to 10%, they do not go against their own policy, but then accepting bonds from the market at higher yields. A good example is just yesterday, for example. They rejected almost 50% of what was bid in the market. And as a result, the 10-year paper, which has in the recent past traded above almost 17%, is now trading below 16%. So moving forward, participation by the IMF allows the government, the national treasury, leeway to allow the central bank to do their job, which is monetary policy. And it becomes a much easier environment for the central bank to operate in.
All right. So another question, still, quite close to what you've responded to. If the Kenyan government stops issuing high interest bonds, will Mansa-X invest more in the NSC?
We have always been supportive of the NSC, Terian. In fact, I actually believe that as I mentioned in my presentation, I actually believe we were the first fund to invest in the gold ETF on the NSC. We were the first fund to invest or even make a trade on the Nairobi Derivatives Exchange. And quite recently, we were heavy participants in trading in Bamburi. And in fact, one of the things I noticed, I think there was a small mistake with our top 10 holdings because for Q3, Bamburi was definitely in our top 10 holdings. So Bamburi was one of the stocks that we heavily invested in. So just to answer, most of our investors do not realize, but we are actually heavy investors in Bamburi. We're heavy investors in Safaricom, and we continue to invest in this. We do not buy. We do not buy into the high yielding bonds for the sake of high yielding bonds. We trade bonds. Okay, if we expect a shift in interest rate movement in bonds, we invest in them based on that. So we don't buy a bond at 17%, even if we know next week it will be at 18%. That's not what we invest in. We can buy a bond at 17% if we expect that interest rates will move to 15%, for example. So we buy bonds for purposes of trading them. We trade interest rates. We don't invest in bonds.
All right. Let's talk about tax now. Could you give us an in-depth, look at the tax implications on income generated from Mansa-X? And we live in a very, some say, unpredictable tax environment as Kenyans. So do I pay withholding tax or capital gains tax?
Yeah, it's a very good question. So I'll answer it in two ways. First, what we have been doing, and then what our recent licensing allows us to do, and maybe the implication for both the fund and the investors. So what we used to do before within the fund, when we just had a money manager license and nothing else, we used to pay on behalf of the investors, all the assets that we buy and sell. We continuously pay the withholding tax, capital gains tax, if at all, within the fund, and also the VAT. But it's very important to note that our fee includes a VAT of 16%. Yeah, again, that's something we pay. Again, so when an investor receives a return of, say, the 21%, what we advise our clients is to then work with their tax advisor you should always declare it as other income. And if you're running a business, again, as other income, it's up to your tax advisor to see based on that versus other assets classes that you hold and other income that you hold, whether that will be available for write-offs against expenses or not. But very recently, now coming to the current situation, we were licensed as a special CIS June of this year. Now, being licensed as a CIS allows us to be exempt for tax in certain regards. But one of the things, I'm very careful around tax, Serian, and that's what I want to say is there are advantages for tax now that Mansa-X is registered as a special CIS. But because a lot of CIS regulations have been changed recently in the less than a year to our own licensing, we will be reaching out to our investors with a very good guideline of the implications of this licensing on their tax obligations. But for sure, it's a positive thing for investors. That's why being licensed as a special CIS was very important for us here at SIB for our product Mansa-X. But I really don't want to give something that's so technical on taxes, and I'm not a tax expert, but we will definitely reach out to investors and give them some more comfort in terms of the response to that concern.
All right, so final question on tax, and I would like both you and Victor to respond to this. How will the changes in tax rates affect investor returns?
Well, the thing with Mansa-X, because we look at things from a global perspective, I will talk about the American market. Lower tax rates in the US, perfect for us. Most of the companies we hold, we expect better returns, better earnings. And for this reason, we actually expect higher stock prices. That's going to be very good for us. Locally, of course, it's important to see the assets that we invest in, which ones are affected by tax. Most of the taxes that we are faced with are withholding tax. That's really for cash and cash equivalent trades. And pretty much that's it, because a lot in this country, capital gains tax is not applied to capital market instruments. One of the reasons, again, we've always felt that our investors should not really be paying any taxes on their gains. But in terms of the return for the fund, in terms of taxes, unless you increase VAT, because the return that our clients get is net of fees and net of VAT. So actually our clients, any return you get, please note that you have been earning 5.8% more. if you didn't have fees and VAT. So if VAT increases, then that would reduce your return. And if it reduces, that will increase your returns. I don't know, Victor, if you have anything else to add.
Maybe to mention, because I'm trying to look at what the person who asked the question had in mind, maybe changes in tax rates here locally. For example, we're talking about an increased taxation, reducing the income everyone gets from their payslip and all. So what I wanted to add here is that if you invest in Mansa-X, you have an advantage in the sense that you're earning a return that is above market average, as opposed to someone who is just investing in the conventional products, and therefore it could offset your tax deduction if you put a portion of that fund in Mansa-X and generate a good return. So it could be a leeway. You cannot avoid that. You cannot evade taxes at all. But if you invest in a fund like Mansa-X, there's an investable amount that you have. Put it in Mansa-X. We are talking about the return that you already mentioned, about 17.72% net year on year. That then can kind of offset the effect of increased taxation.
All right, thank you so much for adding into that response.
And sorry, Terry, I just wanted to deal with one question someone has asked me, yeah?
Please,
and it's
please
actually on
go
WhatsApp. It's actually on WhatsApp. Someone asked me, first of all, I like I mentioned, those top 10 holdings, most of those are actually Q2 top 10 holdings. But somebody asked me, why were you holding 5% in the Japanese yen, yet it's a weak currency? Let me be clear, we were short the Japanese yen. We were not long the Japanese yen. Just to clarify on that. That's something that I've seen some technical people have asked me. Yeah.
All right, thank you so much for that. So without getting into, I guess, your strategy or the tech space and the advancements that you may have, what can you tell us about some of the analytical tools or technological advancements that Mansa-X is utilizing to stay ahead in market predictions?
Well, that's at least an interesting question. We are very plugged in terms of the research that we use here. We work with a lot of global research companies that we actually pay to provide us with the information. We are very big on staying updated on Bloomberg, all the other research houses that we pay for. We use systems that also help us with risk management. For example, being continuously aware of what the portfolio is holding, our own internal financial modeling tools that we use to continuously on a daily basis know how much we are managing, how much the fund is exposed, how much is at risk at any one time. And it's important to note actually that Mansa-X values every day. So, just because we give annual returns, a lot of people might easily forget that even as we finish this webinar today, I will know how much we have made or lost today because of these tools that we use to actually manage risk and continuously do that on a real-time basis. It's one thing to manage risk, and I've worked for 4 banks as a trader before joining SIB, and it's another thing to manage and follow risk on a real-time basis, which is what we do here at Mansa-X. A lot of these tools are available to, as I mentioned, hedge funds around the world. We use the same systems for risk management and portfolio reallocation techniques. I don't know if you're expecting me to name the tools themselves.
No,
I don't think I want to do that.
No, absolutely. All right. So as we go into, just before we get into the outlook for 2025, could you tell us a little bit about some new products that you have in store, perhaps some new ways in which we as investors, can track or, our investments? Can we expect a mobile app, a web portal, and what's in store?
Yes, absolutely. That's a good one, Tyrian, because it's actually one of the things we are working on. We are actually creating a nice app, very nice app that will allow investors to be able to access and even invest or update their investments in Mansa-X and other offerings within SIB. Of course, now I'm just focusing on Mansa-X because it's our Mansa-X webinar. But yes, for sure, we are creating an app that will allow this. We actually feel that we lose a lot of investments from younger folk because of the fact that we don't have an app currently. So it's very important, even from a strategy perspective, that we finish this as quickly as possible. Other products, we will soon be creating a version of the fund that allows you access even from M-Pesa. And again, this is something that will be announced very soon that will allow anybody in the country to actually be able to guide their investment journey on their mobile phone through M-Pesa without the fees that come with it, through a collaboration that we are planning to do very soon. The other thing is, of course, like I mentioned, from the pension fund perspective, we are now pension fund managers for the Taifa Pension Fund. This is something we are doing in collaboration with CPF. And if you're running a pension portfolio out there, please register under the Taifa Pension Fund. SIB / Mansa-X is a fund manager for that pension fund. So if you're looking for a pension fund that's going to give you higher than average returns, because I know a lot of pension fund trustees have been maybe struggling with returns and so on, please join the Taifa Pension Fund. That is something that we will also be part of, and we will continue applying the same skill and the same diligence that we have used to make Mansa-X have a higher return into that Taifa fund as well.
So let's look at the outlook for 2025. What is the net annual return for 2024? Perhaps you can give us a little bit about your projections for Q4. And perhaps with that, Nahashon, you can just give us some insights into what you see as some of the emerging opportunities for 2025.
Okay. Thank you, Terry. I mean, we've been on a good run this year, and I don't want to jinx it by saying that I think we'll close at this level. One of the things is, having been in markets for a very long time, you learn to know that, you can only be as good as you can, but it's very difficult to predict markets. However, we are optimistic that we probably have our best year yet in terms of the returns that we give our investors. We still expect a return similar to where we are currently, above 20% net return, is something that's, barring any unforeseen significant event, will still be doable. Moving forward into 2025, a big part of it is obviously going to be dependent on the Federal Reserve. Is a big deal because that will set the tone of central bank actions around the world. We had, even before the Trump win, we had continuously felt that central banks will slowly start reducing interest rates, and by so doing, to create a very interesting environment for fixed income and by extension the stock markets. So we expected that stock markets will continue to do well. One of the things that we were looking at especially was, with lower interest rates, our portfolio was sort of shifting a little bit, where some assets and companies that we had not invested in for the last 2 years or so, we had started increasing them in our portfolio. Two particular sectors that we were increasing was utility companies. That's why you saw now we started buying like the Southern Company. We are starting to buy into nuclear power companies. That's becoming a big part of our portfolio as well right now. We are also starting to go into real estate farms because these had really been beaten during the period interest rates were high. Falling interest rates, we expect companies like Welltower will do very well. These are companies who started increasing in our portfolio. Lower interest rates, again, lead us to believe that 2025 will be very big for financial services companies. So you'll probably see a lot more Goldman Sachs in our portfolio, a lot more JP Morgan in our portfolio, something we expect in 2025 for sure. We are looking at deregulation. So again, back into oil companies. We had sort of reduced our holdings in oil companies. We will go back into that. Oil supply companies, the Halliburtons and so on, ExxonMobil. You remember we were big on this during the Trump presidency. We are going back into those companies. Again, that's something in 2025, you'll see a difference in our portfolio. So I'm talking about utilities, real estate, energy companies, and banks. From a fixed income perspective, a bit cautious now because we're not so certain about interest rate policy now. We are not as confident as we were before the Trump win. So now a bit of a slowdown in the strategy there. We are big on volatility. So one of the things that Mansa-X actually trades is something called the VIX. So you can actually buy and sell volatility. And volatility tends to be subdued if there's a lot of certainty, in which case you sell volatility. You can actually short volatility. And then during a period when we have somebody more erratic, like Trump, we then tend to go long volatility. So again, in 2025, we see opportunities in going long volatility.
How about Tesla, Nahashon?
We continue to be bullish on Tesla. And of course, right now, with the bromance between Trump and Musk, we expect that this will continue to be one of the stocks that gets a lot of support from the Republican government. So yes, we'll be long that stock as well. It made us a lot of money in 2023. We are hoping it will make us money in 2025. This year, we were in and out of the stock, not as much as we were last year.
So when Trump was elected and the 80% spike that we saw.
Well, the thing is, just before elections, first we had lost. Stock markets had also shed quite a bit. So there was also just taking us back to normal and then pushing us back into the green territory. But yes, we have definitely benefited from that move because our book has been largely long. Like I mentioned, our book at any one time is long short. So sometimes we'll bias it either long or bias it short. Right now it's biased long, but that doesn't mean we don't have short positions.
All right, so I want to begin to ask a couple of other questions that we have received from our audience, and I know we are running short on time now, but I'll ask a few more questions. One is on account opening. Which documents are required to open a joint account with a foreigner? Maybe we can look at both with a non-foreigner and a foreigner, so that we can address that.
I'll let Victor handle that one.
Okay.
Okay, we typically go for the typical KYC, the identification documents, tax identification number, passport photo size, and a completed application form. So our financial advisors are able to take our investors through the onboarding process, which is quite a very smooth process. It's not taxing. So we do due diligence and of course enhanced due diligence based on the complexity of the investor that wants to come and join. Yeah.
All right. Thank you, Victor. We've got another question which I'd like to pose to Nahashon. Have you thought about having a euro-based fund? There are many Kenyans I have spoken to who live in Europe and would like to take advantage of this product, but are discouraged by bank conversion rates from euro to USD, which can be quite high. Nahashon, that's a question from our audience.
This is how I'd answer this. If any client wants to invest in any of our funds, especially what I'd advise, if your income is in euros, we can use swap contracts to allow you to invest in the dollar fund. Okay, this eliminates foreign exchange risk for you, but allows you to participate in the dollar fund. All right. So to put it plainly, if you have 100,000 euros, please come to us, or any amount. I mean, I just use as an example, even 2,000 euros. We will be able to give you a solution that allows you to take part in the dollar fund, and when on exit, get back your euros without losing in exchange rates. Please reach out to. In fact, that's one of our expert areas. That's why I said we have forex hedging abilities within the global markets division. We can do that for you. However, if over time we get a significant number of inquiries, then we will create a euro fund. The dollar fund actually started that way. We had a lot of clients coming to us with dollars, and eventually we created a dollar fund, which is now almost reaching $50 million worth of investments. So if we find that the euro demand is significant enough, we can start something. We can definitely create a Mansa-X euro fund. Like I mentioned, our innovations are very client-centric, and we'll be happy to guide you. Amen. In fact, this one, you can even reach out directly to me if you like. I'll guide you on this.
All right, perfect. Thank you, Nahashon. We've got another question that I'd like to direct to Victor. Can I borrow against my Mansa-X account as security?
Thank you, Cherian. We get this question a lot because people want to leverage the investments to access additional capital and, of course, increase their capital efficiency. So this is based on the relationship you have with your commercial bank, and we like handling it on a case-by-case basis. It's not that we tout it as a product or as an offering that we offer as Mansa-X, but this we like restricting it to a case-by-case basis, and it has so many other factors that need to be considered in terms of even the ticket size and all that, so that we can make it commercially aligned with what we do, and also offer good customer experience to our investors. So we like handling it on a case-by-case basis.
But I'd just like to add that as well. This is a very important thing in terms of the things we have been negotiating behind the scenes on behalf of our investors. We firmly believe that Kenyan banks can offer loans against investments in capital markets. Right now, we have a number of our clients who have actually, as Victor says, we have a number of clients who have actually been able to borrow against their holdings in Mansa-X. So if you're actually looking to borrow against your funds, this is something you should please come to us through your financial advisor. I'm fairly certain we'll find a solution for you.
All right, thank you so much. So we do have another question that's slightly off our conversation today, but I think it's important nonetheless. And this person asks, does Mansa-X offer internship or graduate trainee positions to graduates? Victor, will you respond to that?
We have a few positions that are normally open for internship, and we offer this opportunity to these graduates to come and interact with the investment banking entity as a whole. And we hope we can get more opportunities to be able to take as many as we can, but any one given time due to capacity and of course, being a high octane environment, we're able to take a few guys, take them through training, and be able to get value out of our interactions.
All right, thank you so much. We've got another question. Can a group of people invest without registering an organization?
Yeah, as one way of complying with the anti-money laundering policies, you see that one creates a loophole if a group of people decide to invest and then without formal registration. So we recommend people to form a small group, and the registrar of societies is always open. You can register your small group and then you come and then invest with us. So we encourage people to be in organized groups beyond a joint account. If you're more than people required to open a joint account, then we recognize that as a group investment. So you can either form an investment club, register as an investment company, or make it a self-help group. And then you present with us the certificate of registration, and we are happy to have you on board and enjoy the returns on Mansa-X and other benefits.
All right. So we've got another question. Nahashon, I'd like you to take this. Do you recapitalize profit earnings on top of the initial deposits?
Yes, I mean, the idea of Mansa-X and any other market-determined fund is that any amount that's investable at any time represents the capital that was invested, the earnings therein, that becomes the profit for today. So if yesterday I started with 1,000 shillings and I made 20 shillings, then today I'm investing 1,020 shillings. All right. So that is why we actually have a lock-in period to really make sure that investors take advantage of market dynamics over a longer period of time. The reverse is also true. If I start with 1,000 yesterday and today I'm at 980, I'm starting with less capital. All right. And that's why investors who gained the most from Mansa-X are the investors who've been with us for the longest time without actually withdrawing. Remember the chart I showed you of if you invested $1 million shillings in 2019, it would now be worth 2.7 million shillings. That is only true if you did not withdraw any amount during that period. So yes, there is that compounding effect for a long-term investor.
All right, Nahashon, we have another question, definitely from a current investor. Would you consider changing the format of your statements to make it easier to track the amount earned in each previous quarter?
So our statements have been changing over time based on feedback that we get from clients. And I guess what we would do for this investor, if they can reach out to client services and state exactly what they wish to see on their statements that will make it easier for them, would be more than happy to have that conversation, because we're always looking to give you the most transparent but also easy way to understand how much you've made with us over time or whatever period. So if there's some information you feel we should add or remove from your statements, we are happy to have that conversation with you through your financial advisor or maybe directly through client services. And maybe we see how we can improve our statements. So that's something we're open to do. Maybe one thing I can also mention to investors is over and above doing this webinar, as we've done it today, it's also something that we used to do quite a bit, and it's backed by public demand. It's also to note that from a regulatory perspective, from next year, we'll now also be doing AGMs, and we'll be doing this once a year. It's very similar to this webinar, but it's something that we'll be doing now, even from just a regulatory perspective. But that will not change the fact that we are looking to be doing these webinars as we used to do, really, every quarter.
I would also want to add on Taifa Pension, where we talked about, because I was supposed to expand on that. Taifa Pension is an umbrella pension fund designed for employers, a way of actually minimizing administrative costs, where you don't have to, in your own scheme, in your own company, you have to appoint or nominate an administrator and all other stakeholders that are required. And that one actually increases the burden. But through Taifa Pension Fund, managed by, administrated by CPF Financial Services, of course, and managed by SIB, becomes a very convenient way for employers to be able to channel their pension contributions, which are defined benefit contributions to Taifa Pension Fund, and be able to benefit. So Taifa Pension Fund actually accepts the Tier 2 statutory contributions. And of course, we look forward, as Nahashon said earlier, to generate better benefits as in previously. Thank you.
All right. The question from one of our audience: as a current Mansa-X investor, what will be the advantage of registering for the Taifa Fund vis-a-vis continuing contributing to Mansa-X directly?
This is totally different. It's not meant to compete with Mansa-X Fund. We are talking about two different products here. Remember, this is the employer. Whatever the scheme they are running, they can be able now to channel that, unless you say now you want to withdraw your 250,000 from a bank account and give it to your employer and tell them to channel it through the pension fund. This is totally different, because your pension contributions are deductibles from your monthly income, and those are kind of structured from your payslip. So we encourage people to look at the entire financial planning aspect and know that I need to have this deduction from my employer, through my employer, and have it run through Taifa Pension Fund. And the way you can influence that is when you're called upon and you're being asked how you can be able to, there's a lot of engagement, employee engagement in terms of how their pensions are being managed, and they can be able to give their contributions and guide the board of trustees that we feel it's okay if we have our fund managed through Taifa Pension Fund. That's a contribution, but this is not a competitor for Mansa-X Fund at all.
And even just to add, please note that Mansa-X is a fund managed as a special fund and regulated by CMA. And the strategy that we use is dependent on an information memorandum that is approved by CMA. It's part of what guides the return that we give. Now, when we go to Taifa Pension Fund, we are fund managers, yes, but pension funds are then regulated by a different body, which is the Retirement Benefits Authority, including asset class allocation limits that are very different from Mansa-X. So as Victor says, we're not talking about the same thing. All we are saying is that as fund managers would then begin to give you a return that's reasonably higher than usual because of our demonstrable experience in running a fund like Mansa-X. And just another thing to add, one of the advantages also of the Taifa Pension Fund is we are also allowing people who run their own businesses to create pensions for themselves. We've noticed in this day and age, a lot of people run, especially Gen Zs and younger people don't tend to be employed, but they also need to work towards their retirement. And that's one of the things that we are allowing people to do within Taifa. You can literally go there and just contribute and start a pension scheme for yourself within Taifa Pension Scheme. So 2 different products just run by the same people. You know, we are behind it in terms of how we manage those funds. The same success we have given you with Mansa-X, we then believe we're able to replicate for you in Taifa, but under different regulatory frameworks.
So as we come to a close, some closing remarks, perhaps, something you have not said to both of you, Nahashon and Victor, that you'd like to add, something we should think about as investors or potential new clients, new customers for Mansa-X. Your final thoughts, Nahashon and Victor.
Thank you. I'll go first and then I'll let Nahashon conclude it. So my final take is a call for all investors to look at their current investment portfolio and ask yourself, based on the current performance of my portfolio over the last 4, 5, 10, 15 years, what has been the average return on investment? And when you adjust that for inflation, and then you look at charges and taxes, when you adjust for all those deductibles, what is the net return? With that answer in mind, if you project for the next 5, 10, 15 years, do you see your portfolio enabling you to achieve financial wellness? Financial wellness is a state whereby your investment income is equal to or greater than your burn rate or total expenditure or the expenses month on month. So these are pertinent questions because financial wellness, it has always been subjective. It has never been defined in a certain manner. I'm proud to say that in the near future, I've been working on something which will be able to look at a mathematical relationship of financial wellness. We'll state it mathematically, and I hope if we introduce a scientific concept of financial wellness, people are going to get it. And maybe in the next webinar, we'll be able to debut that formula. Some people might have been lucky to interact with in other webinars and all that kind of stuff. So I'm just consulting widely so that we can have a very well elaborated scientific method of defining financial wellness. But the key principles remain. If you increase your savings rate, if your savings rate is, for example, you'll see most of the guys will recommend 10%, 20%. Your savings rate is dependent on your earning potential. Let's say, for example, you make $1 million. You make $1 million. Someone cannot tell you only invest in 20%, yet your expenses are only 20%. If your expenses are 20%, you are left with 80%. You can actually put that money aside, the 80% of it. And therefore, what that means, by the concept of what you call FIRE, financial independence, retire early, you can actually achieve financial wellness faster. So you need to look at your savings rate, which is the amount saved over the total amount gained multiplied by 100, you get your savings rate. So let us people be keen on their savings rate. And it's just a percentage. It doesn't matter how much you make every other month. You just look at a percentage and say, this is how much I want to allocate over and over. So you can leverage the compounding effect and be able to build your wealth over time. So the key things you need to look at is your savings rate and your expenditure. So when you look at your expenditure, of course, it's not a straight line. It's a subject to inflationary adjustments, and then you can factor in an inflation. For example, it's about 2.7% inflation. It's about 2.7. So you can be able to adjust that, but on average, it's not 2.7. This is just maybe momentarily. If your average lasts 10 years, that number actually goes up. And then because you're looking into the future, you can have a higher inflation factor that we factor in. That one will encourage you to increase your savings rate, and your purchasing power for your investment will be protected into the future. That's my key takeaway.
Okay. Well, for me, it's mostly just to thank our investors. We've been around for 6 years now. I mean, SIB has been around for 30 years, but Mansa-X is a product that is 6 years old now, and from day one, we have really received a lot of support from Kenyans. One of the things when we started this fund, I remember when I did my first video, I said, Kenyans are fairly sophisticated people. I mean, Kenyans will use Uber to work. When they go home, they watch Netflix. When they're ordering food, they'll use Glovo. Kenyans are constantly on the internet. I don't think anyone uses internet the way we do on the African continent. And when people ask me, when you create a product that's going to invest in metals, commodities, I don't know what else, Nahashon, where are the clients going to come from? Kenyans are not going to listen to you. Kenyans like to invest in land and so on. And I remember telling them, no, Kenyans are sophisticated people. Just create something that makes sense and Kenyans will listen to you. And I just want to thank our investors for actually proving us right and proving the concept that if you create something that actually caters to the needs of Kenyans who are very intelligent people, it will actually over time grow. And we've grown from essentially zero to managing about 42 billion now. And a lot of people will ask me, you must have a lot of institutional investors in Mansa-X. And I tell them, no, a lot of our investors, I would say 99.5% of our investors are actually retail investors. So just to say thank you very much. And as a portfolio manager for Mansa-X, I want to promise that the same care, due diligence, trying to achieve good returns for investors, this is something that we will ensure continues within this fund. And we will always aim to give you a good return that does not create disproportionate risk and also will protect your capital from the downside risk and still be liquid enough to be accessed when you need it. This is something, as from the Mansa-X team, we want to continue promising our investors. And once again, thank you very much. And I look forward to future engagements.